Hi, this is Sam and welcome to this week's market commentary. U.S. stocks rose on Friday as investors weighed corporate earnings and consumer confidence before central bank meetings due this week. The S&P 500 climbed 0.1% to 1691 following an earlier drop of 0.18%. The benchmark index lost less than 0.1% for the week after climbing to a record high on July 22nd. Consumer confidence unexpectedly increased in July to the highest level in 6 years. The S&P 500 is heading for a 5.3% advance this month, its biggest since January. Support from central bank and better than estimated earnings have driven the S&P 500 up as much as 151% from its March 2009 low to record highs. Fed has already said economic data will determine the timing and the pace of any reduction in its bond buying. Of the 260 companies in the S&P 500 that have posted quarterly results so far, 73% have exceeded analyst estimates for profit, and 57% have topped sales projections. European stocks declined for the first week in the week as worse than estimated earnings from BASF and ABB raised concern the economic recovery is faltering. The Stoxx Europe 600 index slid 0.3% to 298 this past week. The benchmark gauge has rallied 4.9% so far in July after its decline in June that was the first in 13 months. Analysts have reduced their estimates for annual earnings for companies listed in the Stoxx 600 by 7.8% since the start of the year. Japanese shares fell with the Topix index posting the biggest drop in 6 weeks, as the focus has shifted from monetary measures to earnings. The Topix slid 2.9% to 1167, its biggest decline since June 13. The Nikkei 225 stock average fell 3% to 14,129. First quarter earnings reported by Topix companies will peak this week, with 688 companies scheduled to announce results. Singapore shares closed 0.01% higher on Friday as investors turned cautious ahead of the U.S. Federal Reserve policy meeting this week. The benchmark Straits Times Index inched up 0.42 points to close at 30 to 36 points. Trading volume was 2.68 billion shares worth 1.1 billion Singapore dollars. Treasury 10-year note yield fell 1 basis point to 2.56%. U.S. debt ended 2 weeks of gains after the government sold 99 billion of securities over the previous 3 days, including 7-year debt at the highest yield since July 2011. The MSCI Emerging Markets Index slipped 0.1%, the Shanghai Composite retreated 0.5%, and the crude futures slid 0.7% to 104.70 a barrel, bringing the decline this week to 3.1%. Oil retreated as much as 1.5% today on a speculation that China's plans to cut excess manufacturing capacity will reduce fuel consumption. Gold declined for the third time in 4 days, with futures closing in with $13.21 an ounce on the COMEX in New York. Currently, almost all these market indices are available under our CFD indices list, plus many more benchmarks based on different strategies are available via ETFs for you to trade both long and short with Philip. This is all for today. Hope to see you soon with another round of market commentary soon.